Well, I know this question has got to be bouncing around in your mind because stocks are up, 40, 50, 60, 70%. Now, some stocks like Tesla, if you were able to buy at the lows, are approaching that magic 100% mark. Obviously, Meta's up over 100% since its lows. There's tons of stocks that are up a whole bunch. And we all know it's just a matter of time until it cracks down. So the question becomes, is it time to take your profits in Tesla or any other stock that you have that's up big before it's too late? So let's talk about it today, and I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype, and honestly, it's the best way to support all the creators that you love. So just make sure you like their video and you're subscribed to the channel. Oh yeah, also turn on notifications or else YouTube doesn't show you the videos even though you're subscribed. And the Valentine's Day sale is red hot for my group, guys. So if you want to see all my buys and sells in real time, so whenever I execute exactly what we talk about today, you'll be able to see it in real time. We got tons of courses, live Q&As. You guys can talk with the entire group. I promise you. We have so many members helping out so many of our other members with all kinds of things, guys. There's experts in virtually every field involved in our group. And since I don't have a date for Valentine's Day, I'd really appreciate it if you guys join the group. So that way, at least I got somebody else to hang out with on Valentine's Day. If you don't have a Valentine's, of course. If you got to do that, then all right, cool, we'll catch up the next day. So there are 4 main reasons to sell a stock, in my opinion, that I want to share with you guys today. And we'll also talk about how it kind of works in with taking profits in general in your stocks. Now, the first one's one that I do use on occasion. And honestly, the time to do it is not right now. It was actually previous to now, just about a month ago or so. And that's tax loss harvesting, basically meaning you're going to, sell a stock that's down and you're down on it. So that a way to offset some gains that you had in other stocks that you sold and made money on or sold for a profit. Now, it's not something I use often, but it is a tool that you can use in order to lower your taxes on the other end. And obviously, it's a very viable reason to sell a stock. It takes a lot of thought, planning with your CPA or whoever the heck does your taxes, if you use a tax advisor, whatever you use. But it is an option that's out there for you to use in regards to selling a stock in order to kind of help out with your taxes. The next reason to sell is because your plan just changed with that stock. Now, before we even get rolling too far on this one, you have to answer the question as to why your plan changed with that stock. Now, it could very well be you bought a stock you didn't know, and during that hype rally, 2 years ago or so, hey, you just bought it because some YouTuber said to buy it. Now that you own it, now you understand how to do valuation and how to do a lot of other things, you realize, I don't want to own that stock anymore. It's not a good stock, or it's not one that fits my goals or fits in with my portfolio and the other mix of stocks that I have. So you make a decision to sell at that point in time. That's a change in your plan. But what you don't want to do is you want to make sure you are not selling because based upon the price or something else is kind of causing you to alter your plan instead of actually having a change to your plan itself. Basically letting share price dictate what you do instead of letting your plan dictate what you do. And honestly, sometimes you have a predetermined price in mind you already want to sell at, and when the stock hits that predetermined price, you execute your plan in order to sell that. It still comes back down to what your plan was in the first place. Maybe you didn't change your plan, right? I know we were just talking about changing your plan, but maybe you didn't change your plan. That was your plan, was to sell, the stock. You bought it at 10. When it got to 20, you were going to sell and take your gains. That makes sense at that stage in order for you to sell and take those profits. But that's not the kind of profit taking we're talking about here. We're talking about something completely different. Don't worry, we'll get there, guys. And the third reason is the price is just low, so you sell. Now, I'm totally kidding, guys. I know, but that honestly is what a lot of folks do in regards to, the average investor, me and you and everybody else out there like that. That's honestly what happens is they basically make a decision to sell based upon the share price itself. That's where that meme that, buy high, sell low. It's a meme for a reason, guys. I know it's funny. I know we like to joke about it sometimes, but it's honestly not funny in the sense that a lot of people do that. And that really, really hurts me as an investor and as somebody who's trying to help others invest to see folks take those actions and take those things based strictly upon the share price, because in the short term, Wall Street can take that share price wherever the heck they want, and you got no control over it. It can be the best business ever, but I've seen it time and time and time again where the best business ever trades dirt cheap for no good reason. Wall Street continues to beat it in the ground for no good reason, and it just happens, and you have to understand that's part of the market. And honestly, one of the worst things you can do is sell just strictly based upon the share price. Now, if something else happened to the stock or something else, okay, that makes sense. And that actually leads us into the final one, which I might as well go and talk about it now since I've already kind of led into it. And that would be something fundamentally changed with the business itself. Was there a new regulation that hit that all of a sudden now is going to impact that business? Did a key management team member leave and now they're stuck with a hole? I mean, imagine, Tesla, if Elon left. I'm sorry, that stock's going to have problems and there's going to be a lot of questions from a lot of investors until whoever steps up into his place actually, proves it through action over the course of several years, if you're wanting me to be honest. There's a lot of other companies that are very, very CEO-centric, especially early stage companies where the founder is still there and he's still, growing the company and he's on this crazy mission to make this the next whatever the case is, or something even bigger than that. Those type companies, when that, somebody like that person leaves, that can create a problem and a fundamental change with the business. Did some other regulation happen to where just all of a sudden, hey, what they did was legal, and all of a sudden what they're doing is illegal? Sometimes something fundamentally changing means somebody else comes along and crushes you. I mean, think about MySpace, right? That was all the rage till it wasn't all the rage anymore, and all these other social media platforms have popped up in its place. Now, I'll give Meta credit. They managed to either buy up their competitors or copy them and have something that's good enough to where they continue to grow their user base. But there's a lot of other companies to where, hey, the competition comes and they get there and they surpass them. And now all of a sudden, they aren't the leader anymore. They no longer have pricing power. They no longer are growing. They're actually dying off. And when that happens, that's a fundamental change to the business. And to me, that makes perfect sense as to why you would want to sell that stock. But hey, I hear you guys. What about taking profits specifically in a time like this where everything's ran up real fast, real quick, and it's just screaming it's going to pull back at some point in time? What about taking profits then? Well, it is critical you understand this point right here, especially when stocks are red hot like they are right now. This is just critical, guys. And that is simply this. Taking profits is a trading concept. Now, there is actually one caveat to this that we'll get here in just a second. Hear me out before you go wild and blast me down in the comments or anything else. Hear me out all the way till the end. Everyone that you hear speaking on TV, CNBC, all those other shows like that, they are all traders, and so of course they take their profits. Every fund manager, every portfolio manager, and about 99% of Wall Street are all traders. They're not long-term buy and hold investors like we are. And guess what? Virtually every person in your life who's also telling you to take profits gets their information from those folks on TV and CNBC and all those other places like that. And guess what? That means that they're getting their information from traders in the first place. And most of their understanding of investing in the first place came from traders. Not studying, not long-term buy and hold investors. It came from traders and trading concepts. And I hate to say it, guys, but all that noise, all that activity, everything being geared towards trading, whether you're reading it in the Wall Street Journal or you're watching it on TV, reading a book, anywhere else, all those things are all geared that way for a very, very specific reason. And that's simply because we all think we can do it ourselves, right? I mean, that's kind of the spirit of, the human spirit. Hey, we can do this. I got this. You get out there, you implement these concepts that you hear on TV, these trading concepts and such. And trust me, guys, if those PhDs and those supercomputers and everybody else with all this different sort of stuff struggle with trading, the average person, I know I most certainly would, and I did whenever I tried it for a brief moment in my life, you're going to lose. And then what happens when you lose? You're going to turn to those Wall Street folks who are sitting there telling you, say, I told you this was going to happen. I told you this was going to happen. They're always saying, I told you so, basically because they make 675 different predictions. And of course, if you make that many predictions, one of those is bound to be right. I'm going to know the other 675 that I got wrong and only show you these that I got right. And then you think, oh man, I just would have listened to that guy, or I just would have put my money with him. Man, look at how much money I would have made. And then you go and you do that sort of stuff. And now how do you think those people get rich? It's exactly how they get rich, based upon how much money they draw in, and they want to draw in as much retail money as possible. Cathie Wood's paycheck doesn't come from that, doesn't come from her returns. It comes from how much money they pull into the fund in the first place. That's a very, very key difference between that and somebody else who's a long-term buy and hold investor. She can't get a hold of my money. I'm not going to give her a dime of it because I'm not putting my money in a portfolio or in an index fund like she has or in a fund like she has. It's not going to happen. But if they can get me thinking that I need to take profits and I need to do this and I need to do that, I need to be rotating money and rotating from this sector and rotating to that sector and following all the different things that are out there and such, inevitably I'm going to eventually fail at it. And then I'm going to be right there putting my money right there with those guys, which is how they get paid. As a long-term investor, taking profits means that you're trading unless it's one of those scenarios that we just talked about. If it's not that, then that means that you're trading. But to kind of drive home the point, Warren Buffett's biggest mistakes, now he annually goes on his annual meeting and he tells you all the mistakes that he made that year. But routinely for years, he has said his biggest mistakes were selling stocks that 3x and they would have turned into a 20x if he just would have held. Those were his biggest mistakes, were taking profits after an incredible gain in a stock instead of just holding the thing, which is one of the reasons why he hardly ever sells anymore. He has very specific reasons why he sells. But in general, when he has a great position in a great stock, he just doesn't sell it. He looks to add more to that position. And I'm in the same exact boat. My biggest mistakes ever were selling stocks. I know you guys hate my example of Apple, but that's what I did. I sold for a $600 profit. I took my profits and it cost me 7 figures over the long run. That's the difference between a long-term buy and hold investor and a trader. I would have had to trade that money really, really well for a really, really long time to turn that money into what that money would have turned into if I just would have held the stock. So kind of keep that in mind, that the biggest mistakes from a lot of investors, and I'm not comparing myself to Warren Buffett at all, but you can go through the list of all the long-term great buy and hold investors, and inevitably all of them had the same exact, biggest mistake that they ever made was selling a stock, taking those profits, doing whatever all those other little trading games are, instead of just realizing you got a great stock, just hold it. Now, like I said, there is one caveat to this, and it's kind of, to me, it's kind of newer. It's happened before in the past, but not quite to the scale that it's happened now. And that would be a hype type run. I'm talking like, Wall Street Bets gets a hold of your stock. I'm sorry, in no world can I make a justification for, GameStop or, AMC or one of those being where they were at during those runs up and such. If I was involved in one of those stocks, even if I didn't want to, I would have sold. And actually in my group, we actually talked about that when all that craziness was going on. I was like, even though a lot of folks were like, man, I hope that happens to my stock. I hope that happens to my stock. And I was kind of like, I hope it doesn't, because I'm going to be forced to sell it. And my goal with that stock was to hold it and get a great return over the long run. There's nothing I can do if I pull it forward. Yeah, I've got to sell it, but now I've got to pay the capital gains tax on it. And then now I've got to find another investment to invest in. And when you're trying to find a new investment, that can take weeks, sometimes months to do all the study, put in all the work, create a valuation, do everything you need to do in order to buy that stock. So, I was kind of, 50-50 on it. Some of the stocks maybe I was a little less confident in. Of course, I wouldn't mind if those ran up and I had to sell. But some of the ones that I wanted to hold long term, I didn't want them getting caught up in that mess and running up. So when you have a hype style run like that, where something just gets significantly overheated for no good reason at all, definitely, not just outside of valuation, we're talking 100 times valuation in some cases or more, at that stage, yes, I would absolutely take those profits, but it's not ideal. So that's kind of the caveat there, that again, that's just kind of a newer phenomenon. I'm not saying there hasn't been crazy short squeezes in the past and all this other stuff like that has happened in the past, but they were so rare, and a lot of those things are coming up more and more now. So that's definitely a situation where I would do it. So hopefully this was helpful and kind of cleared up that question as to whether or not I would take profits or not. Remember, this is my opinion, guys. You got to do what's best for you and see what fits your plan and your strategy. But for me, this is the best answer. And remember, the Valentine's Day sale is live, and it is ending on Valentine's Day. If you want to take 5 courses for free and be able to interact with me, be on our live Q&As, we got tons of lessons and exclusive videos and a whole lot of other things in there for you to use and to become a better investor. And click this video here if you want to see the 10 most important stocks in the stock market, and click here if you want to see exactly what I'm doing in this market. So thanks for watching, and we'll see you in the next one.